Welcome to the Manumission podcast, the show dedicated to unshackling ourselves from the status quo. Here's your host, H.H. Morris.
Hello, my friends. I'm back. Good to be with you again. Still very, very busy. A lot of exciting stuff happening in my personal life. And last time I promised that I would speak to you about topics like financial freedom, financial security, and those type of things. But before I jump on that, I just wanted to make a few comments on some of the things that are happening right now. Most notably, the whole debacle with Kathy Griffin and her video or photo of her holding up mock head, Trump's mock head, as if it had been severed, almost like an ISIS video, and the resulting, conflagration that erupted from it. Because I think it's very telling of what's going on out there today. So, just real quick, I wanted to point out the fact that, these type of things, when they happen, when the left does something like that, and the right goes, absolutely apoplectic, okay, that's fine. But it strikes me as odd that the right has become essentially social justice warriors, no different than what they criticize the left for doing, not just in pointing out, hey, one, that's not a funny joke, two, that's poor taste, and oh, by the way, check out how the mainstream media just doesn't really care. It's important to point that out. That double standard, that hypocrisy on the left, and especially on the mainstream media, is very important to point out. But they don't stop there. I mean, if they stop there, it would probably do a lot more for their cause than for them to go completely over the top, social justice warrior, Saul Alinsky tactics like, and start acting like the left by calling for her head, no pun intended, for her to be fired. Just all of these things to just go completely nuts the same way that the left does to conservatives and in many cases libertarians. So you saw another thing happened just a couple of days ago. Might have been yesterday when Bill Maher said something to the effect, calling himself a house nigga or something like that. And I believe he was interviewing Ben Sasse. And now, obviously, everybody's calling for the same thing. Hey, Bill Maher should be fired. I can't believe it. Look at, he can say something like that and get away with it, all that stuff. So it's very telling of where we are politically and culturally in that, and this kind of bolsters my point that I've made several times on this show, which is that there really is no such thing as conservatism. I mean, there are conservatives out there and people that have a conservative mind, but when we're talking about the right, the mainstream right nowadays is not conservative. They are not talking about conservative issues. They are not talking about what was traditionally conservative, non-interventionism. They're not talking about a religion or Christianity. They're not talking about traditionalism or localism, any of those things. The only thing that the right is doing these days is just reacting to the left. And that's why these right reactionists, that's all the mainstream right is these days. They are essentially turning the tables on the left, and all they're doing is using Saul Alinsky tactics against the left. And now that might seem fun and entertaining for some, and it might be a little bit or initially satisfying to kind of see the left get their asses handed to them for the first time in a long time, but that is not something that's going to be long lasting. That's not something that's going to work in the long term in terms of actually fixing things, of turning the culture around, or to at least achieve some semblance of stability in our culture. So if the right, were to just simply point out all of these things that have become so clear to be inconsistencies in leftist ideology, and point out those instances where there's so much hypocrisy, inconsistency, double standards, again, especially when it comes to the media, I think we would actually start to see more progress in that people would be people would essentially, instead of having to defend themselves and to circle the wagons, people would have to start owning up to some of those things, and we'd see kind of more of a stronger center, if you will. Although I don't really like the term centrist or the center because it's very vague. But at least get to a point where we can come back and talk to each other. If we can actually talk to each other, we can sit and we can have these controversial conversations. Many of these controversial things, by the way, shouldn't be that controversial. I mean, we can't talk to things about race, IQ, gender, all those. None of those things should be controversial. Those should be things that anybody from any political spectrum should be able to sit down and have these discussions, hash it out, and be able to have a productive conversation. Right? That's all we need to get to at this point. I'm at this point, I'm not even interested in convincing someone necessarily of, to agree with me in my beliefs or my point of view or anything. All that we really need right now is to come to a point where we can actually just talk, not yell at each other, not, call each other names and racist and unpatriotic, communist thugs and this, Nazis, all of that stuff, because you can't get anywhere in that setting. Okay, I hope you guys understand that, and that's what this show is about, and it's getting to that, freeing ourselves from that reactionary kind of defensive mode, and be able to come together and talk about these things. If we can, at the very least, have honest, productive conversations about a lot of these topics, we would actually be able to start on a path of progress. And I'm not afraid of any of those things, and I'm not afraid to talk about those things or be afraid to confront people about my beliefs, because I think that if I were to do that I could have there would be a good chance that I'd be able to change people's minds. But you can't even start the conversation. All right. So again, hopefully, especially if you might be leaning on the right, or you are from the right, or people on the right, point these things out. Also call them on it. I call them on it. Having come sort of from the right myself, I do call the right on it. If you follow me on social media, I'm mostly on Twitter these days. Facebook, I absolutely detest. I almost never go on it anymore. I'm more active on Twitter, and you might even at some point think that I'm on the right because I criticize the left so much, but I do hold the right accountable on a lot of stuff, and I think we need to, and we'll see. This is very interesting. It's a lot of fun. I'm loving being alive at this time in history, because I think we are actually at a pivotal moment in societal evolution. So, if it's going to be for the better or the worse, that is still to be determined. But nonetheless, it is definitely a treat to be watching it firsthand. So, let me get to the point of the show today, which was financial freedom and financial security. Now, I'm not a financial expert. I am not certified or qualified to tell you or give you any specific guidance on how to invest or do any of these things. I just wanted to share with you guys some of the things that I have done to gain more financial freedom and more financial security. And if you want to try any of these things, maybe you already do, whatever. But I wanted to share some of these things because I've been quite successful with some of these things, and it's important that when we're going through what seems to be such a tumultuous period, that we focus on the things that will actually allow us to achieve more freedom, and that includes financial. So the first thing is, financial freedom and financial security aren't always the same thing. They don't necessarily go hand in hand, and I wanted to kind of disambiguate that real quick. So when I'm talking about financial freedom, that means that you have the freedom to do most of the things that you want to do. At the drop of a hat, that you can drop whatever you're doing. If you wanted to take that vacation that you've been wanting to take for a while, and just pretty much drop everything and go, or that you can travel constantly visiting people and still not being tied, let's say, to a regular 9-to-5 job. Or again, that might not be an issue for you. I mean, for you to go to a regular 9-to-5 job might not seem to you as that you're not free, especially if you're getting treated well and you're getting paid what you want to be paid and all that stuff. But just realize that financial freedom is different from financial security, because you could be financially secure in insofar as maybe you make a lot of money in that 9-to-5 job that you're tied down to. So maybe you don't have a lot of financial freedom, but you do have financial security. Does that make sense? So, you might not be able to just go on vacation anytime, or you might not be able to just, pick up willy-nilly and go anywhere or move anywhere or whatever it is, but you make enough money that you cover all of the things that you need to pay for and then some. And so you're secure in that, and you have, a pension, down the line or something, you have benefits, you have, whatever it may be, right? So I hope it's clear that financial freedom is not necessarily financial security. Now, also, when we're talking about financial security, doesn't also mean that you make a lot of money. Okay, so not just because you can, you have enough money to do with as you please. It also means that you might not have a lot of needs. And if you're someone that doesn't really need a lot of money to cover your expenses because you live a humble life and you don't really need a lot of glitz and glamour in your life, then guess what? You already have financial security, and you probably also have financial freedom because you don't have as many needs. Now, I'm not qualifying that one is better than the other or what you should have, but just note the differences there. All right. So one of the things that I wanted to share with you about me and the fact that I wanted to achieve more financial freedom and more financial security is that I realized, a while ago that I wasn't cut out for the 9-to-5 life. And the fact that I come from a long line of entrepreneurs, I've always been a self-starter and very individualistic. And even though for the past 20 years I've had regular jobs like most of you do, and just you're 9-to-5, you're an employee, you work and you do your job, you come home, you have your things that you do, your hobbies on the weekend and the different interests that you do in the evenings or on holidays or whatever it is. And for the longest time, I was going against myself in that I knew that I wasn't very happy or fulfilled leading this life. Now, I was always very, very appreciative of the fact that, I'd had good jobs. I've been successful in the jobs that I've had, and I got to a point where I was making a good living. But again, it wasn't fulfilling me, and I always felt tied to that job. Now, that's something completely personal, guys. I don't want anybody to think that I either look down on people who aren't kind of wired for entrepreneurship or who are just okay with being employees. Absolutely not. I think we need a little bit of everything out there. And the only reason why I share that is because for those of you who feel the same way and who are kind of more entrepreneurially wired, let's say, that there is a way out and that you need to look for those ways out. So it's not until recently that I've been able to find a way out. And so I've shared with you, and even in the previous show, kind of sort of my journey and my wife and my journey into this. And so just real quick, essentially about 5 years ago, we decided that we were going to start our own business. My wife quit her job, very lucrative 6-figure income job, and we started a business. So, overnight, our income, our revenue stream was cut in half because we decided to jump in the pool of business owners and entrepreneurs. But obviously, you can't pay yourself for a while. You have to sacrifice a lot. And we said, hey, we're young enough. We don't have kids. If we're going to do this, we're going to do it now. So she quit her full-time job to start a business. Now, throughout this whole time, I've kept mine. And we've come to the point now, 5 years later, and it's been a long trip, where I'm finally going to be able to quit my job, and where our business is finally going to make up for and then some both of our our incomes from our regular corporate jobs. And that's a big deal. It's a big deal to me. But I want to show how it's not something simple. I mean, we look at the people that start, Facebook or the Ubers of the world, the Netflixes and all these things, and we think, oh man, these people and these kids that, they were billionaires before they're even 30 years old. And those things are out there, but they're very, very rare. The road to success and the journey of an entrepreneur is neither that simple. I'm not saying it was easy for those people either. I'm just saying that they did achieve a level of success much faster than is usual, and it's something that people shouldn't take lightly and should enter in knowing that it's going to be a lot of sacrifice. So like I said, we essentially cut our income in half overnight, and it's been about 5 years, just under 5 years, almost to the day, where I'll be able to also quit my 9-to-5 job to be able to kind of keep things flowing in the household, while we essentially invested and reinvested in our company. Now, even though our businesses, the couple that we've started, were pretty successful very early on, all things considered, in terms of profitability and revenue and all that kind of stuff, we weren't taking that stuff out to pay ourselves or to help us do fun stuff or luxuries or any of that stuff. We were reinvesting it in the company. As a matter of fact, we went the first 3 years without even going on a vacation. We went the first 9 months when we opened up our first business, 9 months of working every single day straight, not one day off for 9 months. And then after that, we were used to going on at least a 2-week vacation every year. And again, we didn't do that for 3 years, for over 3 years. It wasn't until last winter that we went to Europe, and it was our first vacation in over 3 years. And again, not for anybody to feel sorry for me, not for anybody to be amazed, just to know that is what is usual and customary for people who want to have financial freedom. You have to invest and sacrifice a lot up front. And it's not for a while when all of those things start paying off. All right, so now that we know, I addressed the entrepreneurship thing. Now, if you might not be wired that way, and I understand that. It was very difficult for my wife to kind of be involved in this because she comes from a different type of lifestyle, different culture. Her family, they've all been lifelong employees of where they've worked. Her dad, her uncles, everybody, they've always been employees, and as successful as they've been in going up the corporate ladder and all that stuff, they've always been employees. They retire with big pensions, whatever, but they've always been employees, right? And so for her to kind of wrap her mind around giving up a good, stable, high-paying job is almost like, what are you talking about? This is ridiculous. But it wasn't until, we talked about, having financial freedom and financial security and being essentially the master of your fate, that she, again, it took a while for her to understand this, that it wasn't until she kind of internalized that she said, yes, it's worth the risk. And so now if that is something that's not for you, that's completely fine. Like I said, I don't look down on anybody who isn't an entrepreneur. Not everybody can be an entrepreneur. I sincerely believe that, and that's not a bad thing. So I wanted to talk about some of the things that you can do if you're okay, whether you're going to be an entrepreneur or not. Some of the things that you can also, how you can reach some financial security. And I'll share with you some of the things that I've done over the last few years. And some of these are not going to be new to everybody. Some of these things you're probably already doing, or who knows. But I just wanted to get it out there in case some of you are interested in that. So I'm going to start. I only have 3 things here, like the 3 main ones, and I'm going to start from kind of the most obvious or most well known. That might not be new to anybody listening to this, but just give you my thoughts behind why I got involved in it. Okay, so the first one, again, I'm a libertarian, so this is going to be no surprise to anyone. that it's gold. So I started investing in gold and buying some gold here and there, several years back. And gold had gone down significantly from, the peak. But in listening to a lot of the Austrian economists and a lot of the financial guys, especially the libertarians, I kind of started understanding the meaning of gold and the fact that you're actually talking about real money. And so when you're a libertarian and you start studying, especially Austrian economics, but even Chicago school to a degree, and you're in general a free marketeer, you realize that what we have, this fiat currency, is not money. All right? We're in a very precarious position because we're in a system that deals with something that has no inherent value whatsoever. And there's a lot of things that can happen to make that house of cards come crumbling down. So again, that doesn't mean that this is something that could happen tomorrow. It doesn't mean that we're in an extremely unstable position right now, and all is gloom and doom. All I'm talking about, again, remember, security. And you want to be able to hedge yourself and your wealth against any of those things if and when they happen. In my opinion, it's a matter more of when, not if. But albeit I think it's safe, I try to have at least 10% of my money in gold. And the biggest thing is, and that's the most readily accessible reason here, is just inflation. I mean, if you think about that, the Fed is continually printing more money, then that means that if you do absolutely nothing with your money, even if you're just saving it, you do nothing with, let's say, half your paycheck every month, and you set it aside because you're saving. Whether you're putting it under a mattress or you have it in a bank account, especially these days, you're going to lose purchasing power on that money. There's just no way around it. When we're talking about anywhere between 2 and 3% in inflation every year, just having it sit there, and again, the bank is giving you 0.1% if you have it on a savings account. So again, just doing nothing, you're behind the curve. So what is it that can at least help you shield yourself from that? And to me, that was gold. And over the last few years, I've done well because gold has beaten, in some cases, depending on the length the term that you choose, it's beaten the Dow, or it's been better than inflation and all those type of things. So I think most everybody is aware of that. Now, the other thing that I started doing recently is I got involved with goldmoney.com. It used to be BitGold, and this was something that was started in an effort to kind of almost like Bitcoin, where you can own gold, but you can actually have transactions in it. So you buy some gold in your Gold Money account. It was bought out and it was now called Gold Money, and it's actually now partly owned by Peter Schiff, and he's one of the guys that I follow. And I do own some stock in the company as well, guys. So I just want to be completely clear that. But it's only because I saw how valuable this could be in the long run, where you're not just holding these coins, in your house in a safe somewhere or whatever, but that you could also buy some gold, have a custodian of it, and at any time you can just essentially liquidate that gold or any part of your gold, and they just put it on a card for you, on a debit card. And so you can actually transact with your gold that you have in there. If there's other people that have their Gold Money accounts, you can pay them in gold. And you can just have, so imagine if you have clients or family or friends in other parts of the world where, regardless of what's happening in the foreign exchange, regardless of what's happening with inflation or any of those things, that you can actually start transacting in gold, and you can have prices in units of gold or whatever it is, and it's stable across the entire world, across the country. And like I said, if you need to use it in your local currency at any time, you can do that. You just turn a certain percentage of the gold that you have in there in your vault, and you just turn it into dollars or euros or pounds or whatever it is, and boom, you have it in a debit card that you can use just like you could use any other debit card. All right, so I think that's cool. I think that's interesting. I think it can be revolutionary, but again, only time will tell. But I definitely suggest that you look into that. All right. The next one is Bitcoin. Now, I'm not a big, techie or anything. I'm perfectly comfortable with technology and all that kind of stuff, but I have to, be honest. And I didn't really get on the Bitcoin bandwagon, and I'm still, to some degree, not on, technically on the Bitcoin bandwagon, but I did recognize the fact that this was something that could be very pivotal and important in the long term. So I do have, a few Bitcoin. I was lucky enough that over the last, I think, few weeks, it's just completely skyrocketed. And I was lucky enough that when I started getting into it, it was when it was almost at its bottom. I think when I started buying it, it was like under $300. And as of today, it's back. It went up to like 3,000. And then right now, it went back down to around 2,000. Now it's hovering around 2,500. So I did, pretty well. Again, I didn't buy that much just because I was still a little bit skeptical. And I'm still a little bit skeptical, to be honest. I'm not a Bitcoin bear outright like someone like Peter Schiff is. Peter Schiff just absolutely does not believe in Bitcoin and does not believe that it's going to work in the long run because he subscribes to the belief, then the Austrian school belief. I think this was pretty much Ludwig von Mises who had the regression theorem. And essentially, simply put, what that means is that for something to be money, you have to be able to trace it back down to something that was organically held to be valuable by people, right? So essentially, something that if you can't trace something back to, hey, people actually use this thing to exchange, then it can't really be money. And so that's the point of fiat currency, right? It's just paper and ink. It's not anything that has any inherent value. The reason why we consider gold real money is that it is actually valuable in and of itself, and that people at some point came to transact in it organically. No one said, hey, this right here, this is from now on, it's going to be what we use to exchange. No, that is exactly what fiat money is. When a central power says, hey, these pieces of paper with this ink, with these pictures on it, that is what you're going to use to transact. And that's exactly what fiat means. So the regression theorem says if you can't trace it back to something that has inherent value and that was already used as money organically by people, then it's not really money. Now, someone like Peter Schiff, who doesn't believe in Bitcoin at all, holds to that strictly and says, well, you can't. It's just ones and zeros, and it's not anything of value in and of itself, and it's not something that came up as a store of value in and of itself inherently. So it's not real money, and eventually you're going to have the same issues that you have with fiat currency and yada, yada, yada. Now, I understand what he says, and I think that someone like Ludwig von Mises, if he were alive today, I'm not sure if he'd agree or not, but I do think that we also have to stay up with the times and know that there are a lot of things that we can't foresee in terms of technology and all of those things. And so I'm not convinced that the regression theorem is enough to just essentially write off Bitcoin. Now, I'm still skeptical, and I think that the people who think that it's going to be the end-all and be-all in the future, are maybe just as wrong as Peter Schiff in the other side of the coin, in that you're still also very limited in a lot of ways. Because think about this, right? The people who are for Bitcoin and they're big proponents of Bitcoin, they point to the blockchain. And the blockchain is essentially this, ledger that's decentralized, and you can hold, a lot of information in it. It's being checked and rechecked, and everything is happening at once all over the world. And you can use these things to do a lot of other things, not just transactions. You can do, identification. You can do, deeds to properties. See, there's a lot of ways that people are starting to find a lot of uses for the blockchain itself. So people say, hey, it's not just the Bitcoin itself that's the value. It's the blockchain. It's the whole system that is valuable, and therefore it kind of vitiates the whole argument of the regression theorem, in that there is inherent value to this whole system And I think that's a good argument. My biggest problem with the Bitcoin thing is that it, especially for a shit hits the fan situation, if the internet goes down, if electricity is an issue, the power grid, yada yada yada, your phone, any of this, a lot of stuff can go down, and you're now left with nothing, right? So at the very least, we're talking about things like hard assets like gold, metals, those type of things. You can still use them regardless of what happens. So you can use them physically, or even, again, if you still have, the grid is still up, the internet is working, and all of those things, you have things like gold money. And so now, to be honest here, I'm not a prepper. I'm not one of these people who are expecting the end of the world and things like that. But you also have to be realistic, because if you get to a point where there's no electricity, no internet, or any of those things, gold might not even be the thing that you're going to use to exchange anything. I mean, at that point, things might be dark enough that toilet paper, bullets, and seeds might be more of a currency than even gold, right? So again, I'm kind of on the fence here. I'm not all in Bitcoin, but I'm not a detractor of it. So look into it, do your research, and see what you think. All right. Now, the last one that might be a little bit lesser known to most of you is whole life insurance. And I've been in the insurance industry, in the property and casualty, not life insurance or health insurance, but property and casualty, for it would be 16 years in September. I don't intend to be in my current job by then, so I don't think I'm going to make it to the 16 years, but let's call it 15 years that I've been in that industry. And one of the things that I was not very aware of was whole life insurance. And whole life insurance is essentially an insurance policy that, unlike term life insurance is, when I mentioned the term life insurance, what popped into your head was term life insurance. That's what's most commonly recognized, which is, hey, you go to the insurance company and say, for the next 20 years, if I die within the next 20 years, give me $1 million. And I say, okay, well, you're healthy, you're pretty young, whatever. We're going to bet that you're not going to die within the next 20 years, and that bet is going to cost you, let's say, $50 a month for the next 20 years. And that's our bet, that we're going to bet your $50 per month for 20 years to our $1 million that you're not going to die in the next 20 years. All right. And then the 20 years goes by, I don't die, and I walk away. And now I paid, for 20 years, I paid them $50, but I had the peace of mind. If I do die, obviously they're out the $1 million, and whoever my beneficiary is gets that money. But that's usually how we think of life insurance. Now, one of the other economists, and also an Austrian who I follow, Bob Murphy, some of you guys might be familiar with him. He and his associate, Carlos Lara, have been working with a gentleman by the name of Nelson Nash for a while. And they started what is called the infinite banking concept, IBC. And I found this just absolutely fascinating, because essentially what it comes down to is almost being your own banker. And as a matter of fact, the book that I'm going to point you to is called Becoming Your Own Banker, and it was written by that gentleman, Nelson Nash. I recommend it to everybody. That explains a lot of this in great detail, because I can't do it justice here. I'm going to try to just broadly give you the idea of what it is. All right. So the concept is that in our regular lives, we finance mostly everything, especially the bigger things. And so whether it's our education, our cars, our homes, and we're living in the world of banks and bankers. And especially, we who are looking for greater freedom, we need to find a way to break out of that and be masters of our fate, masters of our own domain. And as long as we have to borrow, money from people who are going to, lend it to us at interest, then we're always going to be shackled in one way or another, and we can get in a lot of trouble. And in fact, a lot of people do get in a lot of trouble when it comes to credit and loans and all that kind of stuff. Well, so how can we kind of break out of that? That was the whole point. That's why it's called the infinite banking concept, or being your own banker. And what they use very specific products in the life insurance industry, and some that most people don't know about. Like I said, most people, when they think of life insurance, they think of term life insurance. In this case, we're talking about whole life insurance. And what that means is that you go to this insurance company and you say, hey, I'm going to die. You know I'm going to die. So I want to pay you however much per month, or they tell you, actually, their actuarials have to figure that out. They say, how much for you to give me $1 million in death benefit when I die. Okay. So no matter what, when I die, you give me $1 million. Okay. And then they crunch the numbers and say, okay, you're 40 years old, you're in good health, whatever. We're going to assume that you're going to live to 100. And so that's going to be what, we're going to crunch the numbers and see what the odds are of you dying before then. And on top of that, we're going to add a kind of a premium to that, because we're going to pay you no matter, when you die. So whether it happens before you're 100, or even if you make it to 100, that's when we're going to cash you out if you do live to that. And we're going to give you this much money, right? Now, the important thing about this is that when you are paying your premiums into this product, you're also building cash value. And what that means is that you can set up these policies so that you almost overpay it. Not almost. You overpay the premium and all those things. So you have the death benefit. You're going to get X amount. Let's say $1 million. You know that you're going to get $1 million when you die, no matter what happens, right? Whether that's tomorrow or that's when you're 100, you're going to get that $1 million. But you can overfund this policy, and it turns essentially into almost like a savings account, because all that overpayment goes into making that a cash value policy, and you can borrow against it. So instead of, let's say I throw in $100,000 into when I fund my life insurance, and on top of that I'm paying my premiums. Well, I have $100,000 sitting in there, so I can always just get $100,000 out of it, and it's my money, right? They have to give it to me. So I go in and online, I go into my dashboard and I say, hey, I need you to give me $100,000 of my the equity that I have, or cash value that I have on this policy, and transfer it to my bank account. Boom. So 3 to 5 days, I have my $100,000 in my checking account, my regular checking account, and I use that to buy, let's say, a house. I don't know where in the U.S. you'd get a house for $100,000, but let's just say I buy a house with it. So I use $100,000, and then I calculate what would it have cost me for me to make the mortgage payments if I just took a traditional loan from a traditional bank. What would have been my mortgage payments to that bank every month for the next 20 years? And I figure that out, and I say, okay, it would have been, let's say, $700 a month. Well, then I start paying myself I start paying that policy back $700 a month, just the same way as if I would have taken the loan out traditionally. But now I'm paying myself back with interest. So then all that money goes back into the bank, the banking policy, what we call the banking policy. And so now, not only do I have the house, but now I'm actually making more money, because the other side of these things, and I want to be very clear about the types of policies that you can use for this, and that you need to be able to do this. It has to be a dividend-paying whole life insurance policy, okay? And the dividend actually pays you, they guarantee, in my particular ones, they guarantee you 4% on your money. So everything that I put in towards my premiums and any overage that I put in there, I get 4% guaranteed every year. Now, for the last several decades, they've actually had a 7% return. I mean that's thousands of times better than any savings account, right? And all of that stuff just starts snowballing. The more that you pay yourself back with interest, as if you were doing it to traditional bank, and you're going to do it to a traditional bank. So why pay the bank, right? Why make them rich? Why make them money when you could be making yourself money? And that's the whole concept behind this. So it's not a get rich quick scheme. It's not about, just throwing this money and then suddenly you have, twice. No, this is a long-term, again, back to financial security, where you are completely outside of the banking system and you are now essentially financing your own life for the rest of your life. And at the end of the day, at the end of your life, you still have millions of dollars that you can leave, your beneficiaries, whether that's your wife, your kids, whatever. And if anything happens to you, obviously in the interim, you still have that death benefit. Obviously, you would have to subtract any of the money that you've taken out in loans to yourself, but still, you at least have that death benefit on top of that. So it's a little bit convoluted. It's not very difficult once you actually read the book and you go through some of the examples and you kind of start kind of mulling it over. It starts kind of just making more and more sense. I'm not doing it justice. I probably even confused some of you guys in the way that I explained it. But I really suggest that you guys look into this, look into infinite banking concept, especially reading the original book, Being Your Own Banker or Becoming Your Own Banker. I don't remember exactly how it's worded, by Nelson Nash. Very interesting. I got a few policies for my wife and myself, and we're doing that. It's pretty cool to know that you can completely extricate yourself from the banking system and kind of put your own life in your own hands, your financial life in your own hands. And so if you guys look, and if you're listening from another country, I'm sure there's similar situations. Remember, whole life insurance is the oldest type of insurance there is. It's probably the oldest financial instrument in the world and in history. All right. So it has to exist in one way or another wherever you're listening to this. Look into it. I mean, I cannot guarantee that it works exactly the same way as it does here in the US, but certainly worthwhile looking into it. All right, so I hope some of this stuff helped out, just sharing with you some of the things that I do that have been successful for me. Again, doesn't necessarily mean that it's going to work for you or that it's right for you, but just wanted you guys to, hopefully this will help some of you guys out. And because of the fact that we're going through so many changes, we're growing so much, and everything seems to be really working out for me and for my wife, I wanted to share some of these wins with you guys, and at least hopefully inspire some of you to get out there and get more control over your financial life, over your financial freedom, and hopefully just freedom altogether. All right. Don't know when I'll talk to you next, but hopefully it'll be sooner rather than later. And so until then, take care of yourselves. If you want to know how you can help me keep the show going, or if you have a question, comment, or recommendation, you can contact me directly or through social media. Find out how to do all that by visiting manumission.com.